Nedbank expects the economy to fare better overall in the second half of the year. The bank says lower inflation, especially on essentials such as food and fuel, supported consumers' purchasing power and real income. This offset the ongoing squeeze from high interest rates. Domestic trade increased during the quarter while retail sales also edged up. It notes the absence of load shedding and the positive impact that has on the economy.
We expect the economy to fare better in the second half of the year, with the main boost coming from domestic demand, supported by firmer consumer confidence, a recovery in real household incomes driven by lower inflation, and lower debt service costs as interest rates start to ease. Despite the progress made on the structural front, operating conditions remain challenging and production costs high. These factors will continue to weigh on producers and exporters, while global demand will likely improve moderately as inflation and monetary policy ease. Subdued demand from China will restrict the upside. Even if international demand does take off, South Africa's elevated cost structures, underlying inefficiencies, and significant infrastructure constraints severely limit our producers' ability to exploit a global upturn fully. With all of this said, we still expect growth of 0.9% in 2024, up slightly from 0.7% in 2023.
The Bureau for Economic Research expects the economy to grow by 1% in 2024 and over 2% in 2025.
We're also expecting a lot of improvements on the logistical side, so that should be less of a constraint. Energy, as you've mentioned, is improving, and that should also go into next year. When we start a shallow cutting cycle with inflation that's coming down quite nicely, that should be supportive of household consumption expenditure and hopefully also investment. We also have, on Wednesday, we have the BER business confidence coming out, and hopefully we'll see an uptick in that.
Stats SA will publish the GDP data at 11:30 on Tuesday. Diabo Seto, SABC News, Johannesburg.